So late last night, early this morning, China released their headlines for their Q2 2019 GDP, and the numbers were actually the worst in at least 27 years, which was 6.2%. Not that the Chinese GDP is exactly trustworthy, as a lot of my contacts tell me that China tends to lie more than other governments. So let me talk about the Chinese economic data that has been coming out for the last couple weeks, and there's actually a clear trend now for months. So on top of the GDP headline, which is 6.2% growth, which I don't believe, there was actually, I forgot to bring up the article. Let me just bring it up real quick. It's the professor from January who said that the GDP was actually below 2%. So let me just Chinese. Okay, and I can talk about some of the other data points here. So the auto sales in China are down a lot. They are definitely trending downward. And on top of that, the first half trade data between the US and China is down 9%. So that has a lot to do with this trade war, which people are claiming is phony, which is not. Talk to the small businessmen on both sides, the manufacturers on both sides who are being hurt by this trade war. Some people are risking bankruptcy, some people's businesses are in jeopardy, and American soybean farmers who are in financial trouble because of the trade war. And yet there's tons of people, some so-called experts, and I'm using air quotes, who are claiming that this trade war is totally fake. There's lots of collateral damage, okay? The trade war is real. The US just didn't know it was in a trade war for a long time. And the US was being taken advantage of in one aspect. Although what the US does with the dollar and sending dollars for goods, that is abusing the exorbitant privilege of the world reserve currency, but other countries also cheat in different ways. Remember, I've said this at length. I criticize every single government. There is no such thing as free trade. There is very little free markets except for a tiny amount of industries. So on top of that, you also had last week announcements of very weak Chinese manufacturing data. And they showed that manufacturers have way too much inventory and that the manufacturers are trying to cut prices to eliminate their inventory. So this confirms what one of my China sources told me in November and December about how Chinese manufacturers, especially in Guangzhou, had way too much inventory and were willing to sell it at almost any price to clear inventory. They were willing to take almost any price because the inventory was just sitting there and they wanted to get rid of it. So China's economy is slowing. In fact, a lot of people here who listen to this podcast, and there's a ton of China apologists, a ton of pro-China trolls who listen to this with Western names. Let me read to you some quotes from the Chinese government data source about the Chinese economy here. So, and the Chinese economy will continue to face, quote, downward pressure in the second half of this year, the country's own National Bureau of Statistics said in a statement. This is directly from a Chinese government agency, okay? Quote, the Chinese economy is still in a complex and grave situation, end quote, it said. That's from the country's National Bureau of Statistics. That is not me making this up. This is directly from a Chinese economic agency. The National Bureau of Statistics just said the Chinese economy is still in a complex and grave situation. And you know why? This goes back to their banking system and their credit problem. And let me summarize that again. There's another very interesting... Okay, after I pull up the Zero Hedge article, I'm going to go back to my Wall Street from E Street fan page. It's a little... Okay, here we go. Okay, this is from a Barron's Roundtable investor. She is very well respected in the industry. Her name is Rupal Bansali, Chief Investment Officer, International and Global Equities, Portfolio Manager at Ariel Investments in New York. She has a new book coming up called Non-Consensus Investing, Being Right When Everyone Else is Wrong. Sounds pretty interesting to me. Hopefully it's an audiobook, and I will take a look at it. And so her analysis of China, and this is in a Barron's article that just came out in the last couple days, is that I'm quoting her now. The popular perception is that the slowdown in China is due to the tariff war with the U.S., as other sources have told me that's not true, that the tariff war is just being blamed. The actual cause for the slowdown in China is the huge pullback in credit growth, which the Chinese economy is addicted to. Starting in the middle of 2018, there's been a 40% pullback year over year in credit growth. This comes in the wake of a more than fourfold increase in credit growth over the last 10 years, from roughly $9 trillion in the banking system to $41 trillion as of the first quarter of 2019. So for perspective's sake, the banking sector's total assets in the US are about 18 trillion. So China's banking sector has more than double the assets in the banking sector, which may or may not be assets, which may or may not be overvalued. And by the way, the Chinese banking sector is holding a lot of those assets on massive amounts of leverage. According to Kyle Bass and the Bank of International Settlements, the Chinese banking sector is leveraged, has about $2 trillion in equity and over 40 trillion in assets. So that's leveraged at least 20 to 1 and increasing. And in Japan, the Japanese banking sector is only about $10 trillion. So China's banking sector is over 4 times the size of Japan's banking sector, with a lot more leverage. So Chinese banks, according to their official statistics, are not at Lehman Brothers leverage levels yet, which were 40 to 1, but they're headed that way. So just massive amount of leverage. Someone says China is not hurting. I know for a fact they are. There's high increases in prices in food. There's high increases in rent in many major cities. So you don't know what you're talking about. And just because they're accumulating gold, like the gold community is saying, does not mean that they do not have problems. Okay? Gold does not solve all their problems, especially when they haven't stopped their credit bubble. And they have massive amounts of dollar-denominated debt. One of my China sources sent me an article in the last 24 hours about the South China Morning Post. This article is from November 18th. I'll attach a link to it. And it's talking about another Chinese economist that is warning that China has over $3 trillion in dollar-denominated debt that could trigger a financial crisis. And guess what? That $3 trillion in dollar-denominated debt, that's as much or more than their total reserves. And even if they sold all of their physical gold, it wouldn't wipe it out. So China can maybe, in theory at least, wipe away their RMB debt, those tens of trillions of dollars in RMB debt. They can wipe away or inflate some of it away or forgive some of it, maybe some combination of those things. But the dollar-denominated debt is different for China. And I'm going to get all kinds of nasty comments and posts from people telling me I know nothing about China. I have a number of good sources who have lived in China or Hong Kong for many years who bring me information. Almost all the people who comment below the video are pro-China people who say that China does no wrong. All governments make mistakes. All governments do things wrong. US, China, Japan, the European Union, all these governments are screwing up economically very, very bad. Whether it's currency devaluation, taxes, trillions of dollars in misallocated capital. Most of China's economy and their GDP is based on speculative real estate and construction and bridges to nowhere and building buildings that fall apart. And they've run out of a lot of infrastructure projects. There's only so much infrastructure projects that you can build that are actually useful. And a ton of it now, a ton of their construction still is on speculative real estate. It's over 50 million empty houses, and it's still going. So let me read, since we're doing a recap here, let me read this January 5th article from 2019. So this is 7 months old, but I think this is important. And hopefully this Chinese economic professor was not with the social credit score penalty. Hopefully he was not, thrown in prison or tortured or anything worse than that. So this Chinese professor, he did his own research, and he says that the real Chinese GDP is below 2%. So stirring an unpleasant echoes of the market chaos that swept the world in the opening days of 2016, Apple's decision to cut its quarterly revenue guidance for the first time in 16 years, citing slow iPhone sales in China as a primary culprit, reinforced concerns about slowing growth in the world's second largest economy that could have wide-ranging repercussions for global markets. This wasn't the only factor prompting fears over slowing Chinese economic growth. A batch of soft economic data, including consumption, manufacturing surveys, and retail sales indicators have undoubtedly helped contribute to the paranoia. And this article continues, when prognosticating the direction of global markets in 2019, all eyes will be on the USA's largest trading partner, which is China. For the first time since this overtook Japan as the world's second largest economy in 2011. And by the way, the purchasing power parity and average income per capita is much lower in China. So on certain measurements, China is not the second largest economy. So China has displayed surprisingly weak economic data that have somehow obscured the widely held, if rarely discussed in public belief, that these data, which are compiled by the Chinese state, are largely suspect. And remember, I read that even China's own National Bureau of Statistics is saying that China's economy is in a grave situation. In the last 12 to 18 months, we had the head of the People's Bank of China talk about a Minsky moment, because credit bubbles are not sustainable. Even if you have trillions of dollars in gold, a 50 trillion plus and growing credit bubble is not sustainable. Okay, the gold only helps so much. The gold community can scream at this all they want. Most of the people in the gold community are lazy or dishonest and have been wrong on pretty much everything for a decade. There's gold people out there that have bad track records now for a decade that are saying that gold's going to $87,000. I laughed when I saw the headline. I didn't even look at the interview. Because at least one of the people in there, as smart as he is, and I've interviewed the guy, Bill Holter, I respect him, he's a smart guy, but he's been wrong on pretty much all his predictions for a decade. You can't invest or trade on that stuff. You can listen to it. It's fear porn, but it's not useful. Okay, and in a world of $87,000 an ounce gold, it's going to be a very scary world. Guns and ammo will be at a premium. Being able to grow your own food will be at a premium. So, I mean, it's not really a good world where a lot of people want to be living, in a world with that type of gold price. And in that world, the governments, wouldn't they just try to windfall profits tax gold or bring an army to try to confiscate some of your gold? So, I mean, that's a very dystopian world. It's not going to be peaceful and pleasant at all. Thanks, Jesse, for the super chat. I appreciate it. Actually, I have better sources than you, Bitcoin Map. I literally have information, people, hedge fund managers and other high-level sources. I get copies of newsletters that are $30,000 per year. I get copies of those from people. I can't name the newsletters, but I get hedge fund quality research on a lot of things for free. So the bottom line is that things are getting a lot worse in China, and ultimately the auto sales will rebound at some point in China, but they were way too high. So there was credit-fueled growth. There's not going to be a lot of credit for a lot of auto sales in China. That's going to have to go away. And we've seen what the Chinese government has done, threatening to reduce sales for their purchases for Boeing. It'll be interesting to see how the Chinese government decide to do with General Motors, because General Motors still has a very large presence in China. I believe General Motors was the first large American corporation to build a factory in China. My buddy Dan Collins, who worked for General Motors for over 20 years, he learned Mandarin and he moved from Michigan to China like 25 years ago. I think he was one of their first plant managers to help set up the factory there. So it'll be interesting to see what the Chinese government decides to do with General Motors as this trade war escalates. My take on crypto and treasury: as things get worse in China, Bitcoin will go higher. It's not necessarily a safe haven. It's going to be used as a temporary tool to get money out of China, because there are a lot of capital controls and there are a lot of problems now in getting money in and out of Hong Kong. A lot of the really rich families in Hong Kong that hate the Communist Party of China, that hate the Chinese government on the mainland, the rich families in Hong Kong, if they have not already gotten their money out, they will get it out soon. Probably in 12 months. Less than 12 months or less. The really, really rich families in Hong Kong that own a lot of the businesses and investments and real estate in Hong Kong, the ones who are not necessarily super dirty, who left mainland China shortly after Mao took over and have been in Hong Kong a long time and hate communism, they will be moving their money out. So even though there was a temporary victory with the the extradition bill in China, they see the writing on the wall, and they see how bad things are going to get in the near future. And if they're smart, they're already moving their money out now. So I could see, and Kyle Bass has talked about this in his Real Vision Television interview. He talked about this for free. Real Vision Television released the interview. I'll attach a link to it at the end of the video. You can take a look at the Kyle Bass, where he lays out the problems in Hong Kong with the Hong Kong dollar and their dollar peg. I don't know if I agree with everything he's saying about that, but Hong Kong has been a place where a lot of money has been laundered for a very long time, where a lot of drug money and money that the Chinese government has stolen from the People's Bank of China that has been printed for free has been parked there. It has been taken out of the mainland. Chinese businessmen have done it too. Corrupt Chinese businessmen on the mainland have done it too. I don't know about the problem with the other cryptos is they're not liquid. So the smaller cryptos are not liquid enough to move a lot of money in and out. So your Bitcoins, your Ethereums, your Litecoins, it's going to have to be big enough with enough trading volume to move money in and out. Yeah, I'm rooting for the Hong Kong people to maintain free speech and peaceful protests, but it's just a temporary victory. It's not looking too good. I think it's only a matter of time before the crackdown gets even worse in Hong Kong. Okay, I'm looking at listener questions and comments. There's a bunch of analysis here from economists about the GDP data. If you want to look more, a lot of the bad data in GDP was from manufacturers. So manufacturers and construction, it's slowing down a lot in China. They're saying that the stimulus in China, the QE that the Chinese government has done, is benefiting consumer and service sector, but I'm not so sure. So we'll see. I think long term, there is a lot of successful businesses in China. I am worried about accounting fraud in China. Fraud is pervasive. If some of the smartest hedge fund managers and money managers like John Paulson lost, I believe, $700 million of his own money and his clients' money on Sino Forest and other investments in the China hustle. It's covered in the documentary. So if he can get fooled, and most people are not aware of this unless you're a financial professional, but if you're a large hedge fund, before you buy investments in a company, you send people there to do due diligence, you send auditors, you send people to check. So those people were fooled. So when there was an investors day, these companies that were committing fraud in the China hustle, they knew that the auditors for the hedge funds were coming, and then they staged like that the company was still running and the electricity was on. You'll see this in the China Hustle documentary. I highly recommend watching that if you haven't done so. I highly recommend reading the book, China's Great Wall of Debt. So things are getting a lot worse in China. I think the real GDP... Oh, I didn't finish the rest of this article about the below 2%. Let me just continue this real quick. The Financial Times published a story citing a presentation by a controversial yet widely recognizable Chinese economist and others who argue that China's GDP growth could be much weaker than the official data, which showed the Chinese economy grew at an annualized rate of 6.7% through the third quarter of 2018. To the consternation of Chinese censors, a presentation delivered by an economics professor at Renmin University in Beijing sparked a controversy in December of 2018 when the professor claimed that a secret government research group had estimated China's growth in gross domestic product could be as low as 1.67% in 2018, far below the official rate. So China was claiming 6.7% in 2018 GDP growth, and this professor claims 1.67% in 2018. And when you add in a real inflation, they're not growing and all their economy would be contracting. So even experts who are skeptical of the official data dismiss the presentation delivered by Professor Xiang Songzhu as unrealistic, yet despite being scrubbed from Chinese social media and the mainland internet, because China doesn't allow dissent, China does not allow free speech, the presentation has been viewed 1.2 million times on YouTube. And there's a clip in the article suggesting that Xiang's warnings are resonating with everyday Chinese consumers who are struggling with one of the worst performing. The stock market has rallied since, based on the quantitative easing from China and a collapsing shadow lending sector. So I've talked about this, problems in the peer-to-peer lending and shadow banking systems. So, and in a crackdown on China's vast online peer-to-peer lending infrastructure, and the currency with the trade war. So if you want to look at the presentation, I'm not sure, it looks like it's in Mandarin, so maybe someone of our listeners would translate. Although unfortunately, most of the people who comment below my videos are pro-China and always defend China and say that China can't do any wrong. This is true. Kyle Bass has had problems recently with his hedge fund trades, but that's because he's taking on governments, but he's still a billionaire as far as I know. So I wouldn't talk too much shit on him. The man can retire and not have to work again. And just because his analysis hasn't made money doesn't mean he's wrong. It just means the governments are good at manipulating markets and changing the rules. Now, I never said to trade on any of his advice, but his analysis of a lot of these different economies is correct in my view. The problem is he's going up against governments. And the governments, as I've said for years now, can change the rules, move the goalposts, and cheat. And the Chinese government is very good at it. So is the US government. So is Japan. It appears the European Union isn't as good, which is why you have crazy stuff from the Christine Lagarde talking about how good negative interest rates are and why so much capital is going to be leaving the European Union and probably coming to the US. Bitcoin Map says China is winning globally. They are investing into Africa and South America, which will lead the Bitcoin revolution. So China is not necessarily winning globally. They are laying debt traps, which is not much better than what the European colonialism is and then what the American government did post-World War II. They're doing pretty much the same thing now. There's a lot of research on this. Articles, videos, documentaries, a lot of it. They're not much. Meet the new boss, same as the old boss. There's not much difference. It's gunboat diplomacy. I read an article on the last China live stream a few days ago that a retired colonel or general from the People's Liberation Army said that eventually the Chinese military is going to go over and enforce all those trade deals you're saying are so good for Africa and South America. So they're going to go over there and use force and do regime change. And there's news stories out about the damage that Chinese workers do in these foreign economies. How these Chinese companies do not hire many employees locally. They import Chinese workers, and there's devastation with social impact and families there. How a lot of women are impregnated by these Chinese workers, and then the workers leave. There's a lot of problems with all these governments. Okay, I'm going to get a lot of hate for this. Okay, there's tons of pro-China people and China trolls. I know the Chinese government pays people to post this, and they don't even have to pay some people. Some people are just useful idiots, defending China no matter what. All these governments suck. There is no good government at this point. I wouldn't go all in on any... This is not financial advice, but I wouldn't put all my money into gold or silver or Bitcoin. I wouldn't be all in on anything or rental properties, but I know people do up all the time. There's no free speech in China. There's a social credit score system. If you as a social credit score system rolls out in China, if you buy a VPN on a credit card, your social credit score is going to get dinged, and they're going to find you. So there's a lot of problems in China. And I also just saw recently that the People's Bank of China announced that they're testing for the government cryptocurrency is going successful. You already have WeChat and Alipay in many of the major cities in China, and China is going cashless already with smartphones and QR codes. But in the near future, I don't know exactly when, but probably less than 7 to 10 years, you're going to see the Chinese government ban cash. And then it's going to be full implementation of social credit score. They're going to track and tax every transaction, and if they don't like your purchases, you're going to get in trouble. And then they're going to have a full RMB, a digital crypto RMB. So if you do something they don't like, you're automatically taxed or automatically fined, or your credit card or bank accounts are shut down. So China has been testing their digital crypto RMB for a couple years now, but the tests are going well, and I don't know exactly when they're going to launch, but I wouldn't be surprised if they did it in less than 5 years. The Chinese government cares about their interests. then why do people, when they get scammed in peer-to-peer lending scams and other frauds in China, why doesn't the government help them? Wow, a Bitcoin guy who defends China, I just blocked him. I thought Bitcoin people were supposed to be pro-free market, pro-free speech, pro-libertarian. Apparently not. Apparently there's a lot of people who are chasing Bitcoin's profits higher who don't understand one of the major reasons why Bitcoin was created by Satoshi. Okay, the Chinese government, there's tons of evidence that this guy is ignoring that the Chinese government just doesn't care about most of their citizens. Okay, there's tons of scams and frauds in China. There's no rule of law. There's sketchy private property with the 70-year lease. Whenever there's a peer-to-peer lending, I've heard about this a lot. Whenever there's a peer-to-peer lending scheme and people lose their life savings, where is the Chinese government to throw the scamster in prison? Yeah, there's lots of news stories out there and evidence that these people are just ignoring. Exactly, organ harvesting too. I don't want to talk about that, but there's lots. So the Chinese government is not much better, if at all, than the US government. Now, what they're doing in South America and Africa, they're laying debt traps. So it's a win-win scenario only for China. It's not a win-win scenario for Africa. They may get like a road or a train thing that they can't afford, and then they're bankrupt, and then the Chinese government dictates terms. Wow, Joseph says the Chinese government was behind peer-to-peer scams. Are you sure about that? That would be crazy if they did. There's a lot of them. It's really sad. Look, I criticize all governments. Anyone who says I don't hasn't been paying attention on this channel. They're either ignorant or lying or biased as hell. Crypto is being used to move out of certain fiat currencies. So I don't know if people are buying and holding crypto, but crypto is being used to get laundered money out of China and Hong Kong. For now, at least. Suicide Van says much of China's GDP is inflation and lies. I agree, and so is the US. Japan is underreporting inflation. Again, I'm going to criticize all the governments. But in this case, China's GDP, 6.2%, is not 6.2% of GDP. Gold is insurance. Gold is insurance. Gold is only useful as collateral in a bust. Good collateral. I don't fully agree with that. It is also used as collateral, but most people who own physical gold don't want the government knowing that they own gold. So you could go, this is theoretical, you could go to a bank and like a local branch of your bank and tell the bank that you own a lot of gold, and you could use it as collateral for a small business loan or for a real estate loan to buy real estate. But most people who own physical gold don't want the government and banks knowing that they own a lot of gold. So it is good collateral, and you could use it for that purpose, and in the past it was used for that purpose, but I think most people who own physical gold now in the United States don't want to use it for that purpose. So most people are just buying it for savings, to preserve purchasing power in their savings, and for insurance, for wealth preservation and insurance. Crazy Ant says, it's amazing how many of his friends and family ask me when he will come and visit China. They want him to take money with him out of China and pass it along to other family and friends. Yeah, I've heard the same stories from other sources. It's very common. And you'd think that the government would figure out how to crack down on it, but so far they haven't stopped that yet. Joseph says the new victory of delaying the extradition bill in Hong Kong will help people enough time to get their money out. Yep, that's what I expect. I expect a lot of flight capital out of Hong Kong starting immediately. Probably has already started in less than 2 years. Because the Chinese government, they're not going to... This makes them lose face. So this loss in Hong Kong makes the Chinese Communist Party or Communist Party of China, CPC, lose a lot of face. So they're not going to give this up. The crackdown is going to be stronger. They're not going to totally give up on the extradition bill. So you're going to see a lot of the more affluent people in Hong Kong who hate the mainland government. You're going to see them move more and more money out while they still can. Beijing is desperate for money. Well, according to my sources, the elites at the high end of the government have been having the People's Bank of China print billions extra for them per month. And that money's been laundered out for years. So I don't know if they're desperate for money. They're already rich. The people at the really top are rich already now. And they didn't build the business. They just used the central bank to print them many billions of dollars in extra free currency. And then they laundered it out of mainland China. Okay, I criticize every single government. Okay, guys, well, that's it for right now. I'll attach links to these stories, but I'm going to get some really nasty comments in the section that, oh, you don't know anything about China because you haven't visited. I have a lot of sources who lived there over a decade. Paid newsletters, copies of paid newsletters that hedge funds get from China. So I think I do know what I'm talking about. It's not just China Uncensored and ADV China. I have a lot of sources bringing me information here. And there are a lot of problems in China that the gold community and the alternative media will not talk about. Because it does not fit the China is accumulating gold, China is good, China will crash the dollar narrative. China can dump all of their US treasuries now and it will not crash the dollar. Okay, the commercial banks, the primary dealers, the different plunge protection teams and exchange stabilization fund, the bond mutual funds, the pension funds. There are a lot of entities that own more treasuries now than the Chinese government. And they all either stupidly, or for whatever reason, want to buy more treasuries. Either they have to buy them, in the case of the primary dealers, because they're contractually obligated to buy some, and then they can just stash them in the hold to maturity account, which is what Victor Sprondio's research has come up with. Or they're stupid. They believe that treasuries are still going to be good long-term investments. So this narrative that the gold community and the alternative media is that China is going to crash the dollar, China is going to go to a gold-backed RMB or some type of petro contract with the RMB. A lot of it is just ridiculous. China does not allow gold to leave the country. Okay? Physical gold bullion is not allowed to leave the country of China. So, and none of the people in the gold... I've never heard that from anyone in the gold community. Never heard that from anyone in the alternative media. That's what my China sources tell me, and I've confirmed that multiple places. Which asset class is good for investing during rate reduction cycle? It's an interesting question. Rate reduction cycle would benefit like utilities, because normally utilities have to borrow. This is not financial advice. So utilities, more defensive stocks that people have to buy things. Rental properties would be good. Rental properties, if you know what you're doing in certain markets, rental properties would be safe. Yeah, healthcare is like a staple. People pay their health bills first. So consumer staples, utilities, healthcare. The gold miners, you have to be careful because unless the gold price goes higher, some of these gold miners and a lot of the silver miners are still in trouble financially. I'm hearing in the gold community that a lot of the gold miners, any gold miner is a good buy. I hear it all the time on a daily basis still over the last couple months that any gold miner is a good buy and any silver miner is a good buy. I totally disagree. If the gold price has a correction or goes sideways for a little while and does not go up, some of these companies are going to either have to raise a lot of capital, they're going to sell out for pennies on the dollar, they're not going to sell for premiums, or they're not going to make it much long. Gold is old. Gold is safe, but it's manipulated. The governments have figured out, especially the US government and the European government, because there's the Dimitri Speck book that came out in 2011. He's a member of GATA, how the European Union was panicking when gold price went to 1900. So those governments are good at manipulating gold. But they cannot manipulate gold to zero. They can't even manipulate gold down to 1,000. It would bankrupt all the gold miners. And then they'd have supply problems. They can only manipulate gold and cap it at certain price levels for a certain amount of time. And then they have to allow the gold price up. So it's like cap, and it's slow retreat, as James Turk says. So they can't cap. If the manipulators were 100% powerful in gold and silver, gold would be capped. It would have never went over 1,000. Silver would have never went over 10. But then you'd run out of supply. The manipulation in gold and silver is a price control. And what happens in price controls? You get shortages eventually. So there's shortages at certain prices. Eventually, the miners run out of $500 gold to mine. Eventually, the miners run out of $800 gold to mine. We're about at the point where the miners are running out of $800 and $900 gold an ounce to produce. And the silver miners are just about out of $13 an ounce or lower silver to produce at a profit. So there's limits to the manipulation. At some point, the prices will have to be allowed to go higher, or a large chunk of the primary silver miners are in jeopardy of going bankrupt. Okay, well, I've been doing this a lot longer than I planned, so this is it for right now, and I'll speak to you guys later. I believe I have Daniel Lacaille booked for an interview tomorrow, but I'll have to check my emails to confirm that. Okay, bye for now.